Price. Okay, I'm happy with that 730 on that markdown. Here we are. We're hitting 55 cents. Our limit order is 35. They marked it down 35,000. This is the first opening bell. The put side's going high, so we're going to see where that market tops out. As that market's topping out, this side's going to put a bottom in. Go into your MMT application because we're printing 55 pennies. Someone just printed 90 there now, folks. Okay? On the 420. How many pennies? I'm willing to buy there. They were marked down $1.54 on the 420 call. All right, well then we better. What is Google doing? I need to know what it's doing. Here we are on the Apple call. It's a 415. It's a weekly, and 740 is the low. And I have bids out at 670 before the opening bell, I believe, and 730 or something like that. And it's right here at 740, right where I said it would go in the shorter term. And we are not bouncing enough in Google yet. We need to see a stronger move off of the bottoms in the first 2-minute print. And you've made a series of lows in that 2 minutes. You made 11 of them. So keep your other bids, drop the 35 penny bid, and take it down to 25 cents right here, or 30 cents. This is the 630, right. 730 is holding. I'm buying there. At what price? Yeah, you would. Put it down there at 30 pennies because you're rolling over in the brain. Brian? Yeah, you see the lows? You're making 22 lows, young man. Find out. Hey, Kareen, where's the lower delta on this thing? What's a delta down or a delta and a half? No, Google it, man. What is the number? Damn it. All right, wait now. Google has to bounce to stay in it. If the rest of people aren't hit, cancel it. If the rest of people aren't hit, huh? 480 is the low. It's low risk. Here. It's a low risk. You can take one, but it's got to bounce. Well, yeah, watch the application and see what it says. We're live on video here with those entries at that bottom. Now what the MMTs are going to do is they got the low of the day at 480. They marked it down 510. They did extremely well. Now as we bounce higher, these will go up in value, and then we're going to have a limit order out to sell into the strength. So we're going to put these out at $6.20 on a limit out off of that bottom. If you're bouncing, if you're not bouncing, you won't see the price. And here we are. We're at that low. We got it. This is that opening bell, and we've got that nice first calendar yearly 2012 yearly now, and today's date is 1/13, Friday the 13th. Well, listen, we don't care about what day it is. What we do care about, it's the 15th day that the market had not even had a correction from our Christmas holiday, and then the following week, of course, we had our New Year's that we're in the tape, and it's the first day, and it happened on the 15th day in the pre-market futures, is that we made the lows, but we said that we're going to come up off the bottoms, and we are. And I'll update everyone right here on the E-minis. This was the bottom right here, and here's how we turned. Now, equities will follow that pattern, and you'll see it in Google too, because Google is part of the Nasdaq E-mini bouncing off of this bottom here. And it all happened in exactly 23 minutes. And it's the first calendar yearly sell-off. You can see it. Cancel that order. Cancel that order. Go down to a nickel. We're down 101 points right now in less than 30 minutes. This is that downside volatility that the market is distributing. However, we are going into a major calendar yearly earnings season. The markets have been very strong 14 days in a row. And so far, what we would like to illustrate on 113 of 2012 is that 30-minute rate of change that occurred on a gap down. However, the prior days, they've been coming in and buying equities. And we have a holiday on Monday, observing Dr. King's celebration day. It comes once a year. And so markets will be closed. The other thing that we would like to point out that would be favorable is how they're going to bounce off of that I said that volatility was going to increase a couple of days ago, MMTs, and this is part of it. And the closer, because it's Friday, because it's a weekly expiration, you're bouncing and you're doing okay in the Google trade right now. So basically, we're making that bottom, and that bottom's coming in less than 30 minutes. That's the first bounce, MMT. Look. So that's why we're leveraging up. And you can clearly see it that the futures right over here aren't doing all that much, but they're positive at their support level. And that's where you learn how to buy this left elbow gap down. You buy down here, then you sell it to the public back up here. And that's how you trade a morning gap down. And it's the first calendar monthly futures, a bear future gap down tape versus the diminishing on balance volume. The first 14 days was on minus volume as you were rising, diminishing on balance volume. So we'll take today and we'll see exactly where the sell side volume is. And we'll do that. That's exactly what we're going to do. And we're going to come up here to resistance here. So that means that equities that bounced off their intraday lows, look to see if they roll right back over. And you can see how the indexes are going right back into that. So once you do make your move, you're rolling over. So you have to be a quick seller back to who? The public. So when you're buying at the bottom, you're selling up here, you see, and they get to take your ownership and you get to take the money. So now that we're pulling back, the futures are going to build a bottom over time this morning. This is a 26-minute opening bell update here and the E-mini. The other thing that they're going to be looking for is the S&P E-mini futures and how to trade these and why you can make lots of money on the E-minis long and short. See, it's the first time as of starting the 15th day on Friday that they're building a bottom down here at this support level. So it's very important to understand how a market would bounce. If it's going to be a bull, that means that the bull is going to absorb all of this bear volatility now. Okay? The problem in the first 14 days of the calendar year, the on-balance buy-side volume was not running at the higher rate of change that we would have liked to have seen. However, that could change at any time. And during the earnings season, we're going to be looking at buying what? Leadership quality in this kind of volatility. Okay? And this is the kind of thing that we're going to be looking at and the kinds of things we're going to be doing. Looks like we've had a nice reversal on Apple. So things are rolling up. And what are they doing? They're rolling over in price. Opening bell 28 minutes, 113, 2012. Trade management, risk management, call put side, Dow down 105 handles, S&P are all of these things are pulling back to support levels. We'll see where the bull enters the tape. So it's the first calendar downside volatility.